Good morning, everybody. Hey, welcome to Tuesday, March 10th. Yesterday was quite the day, I would say. The biggest point drop in terms of dollars down that we've seen. Percentage wise, not so much, but still a rough day yesterday. But you can see that actually today, not quite so bad. We are actually starting to see some green. Now the green has diminished a little bit, and Dave and I will talk about that here in just a few moments um, as we get ready to discuss what's kind of going out there and what's going on in the world today. So, hey, hang tight. I'm looking forward to my conversation with Dave, and he'll be with me next up.
Hi there, family at Womack there. I am Morning Dave. And it's time to double check and see what's happening with your money. Well, yesterday was, well, what do you call it? Oh, how about a bloodbath? Yeah. Dow and down. The Dow was down by over 2,000 points, the single biggest point loss in history. Well, that means we'll probably go up today. Wonder why. Let's check in with Phillip Statler from Statler Financial Services in downtown Sebring. Without even seeing anything, I'm going to assume there's a bounce this morning, Phillip, and I'm betting on a little bit of a one, aren't you?
Well, I am, given the disastrous day yesterday. Um, I think when we look at the total point drops, it was in dollars was probably the biggest drop we've seen. Now, percentage wise, not so much, right? It was down what, less than 8%. So, not that that was a small number. Don't get me wrong, but still, you would expect at least a little give back today. And we are seeing some green ink, but that green ink has diminished this morning from about 4% up to less than 3% up right now.
Well, let's take what we can get, but let's explain why too. And it was a headline that I missed in the process of some personal items yesterday evening. One of the things on one of my tip sheets that I'm getting is that the investors are hoping that the bloodbath we took yesterday will change the administration's fiscal response to the coronavirus crisis. Evidently, somebody in the White House read that headline and let the rumor mill start flying, didn't they?
Well, not so much on that one. I mean, they did, but it was more what President Trump said last night. He came out of a press release and said he was meeting with Congress today, the Senate, and he floated this payroll tax cut idea out there. And so once he did that, and the traders saw that the president was getting ready, or at least making the assumption he's getting ready to step in and help, it started to drive futures up tremendously. And so, like I said, we saw futures up over 4% early this morning.
And when the futures go up by four digits, that generally means just rampant enthusiasm because they have a tendency to be a little bit more conservative than when the actual money starts getting thrown around. Interesting part was, you and I both noticed it before we went on the air, about 6 o'clock this morning, things started to turn a little south and the bloom went off the rose. Don't get me wrong, we're still green, and we're green to the extreme on the futures, just not as party level green as we were, even 5 hours ago.
That's right. And so what's happened and what's made us start to lose some of that bloom is that now White House folks are coming out and basically leaking that we're not really there right now in terms of creating an economic response to the coronavirus. So they're really looking at it saying, okay, we don't know exactly why President Bush said that, but we're not really ready to unleash anything right now.
And if there is one legitimate ding that you can put on President Trump, it's the fact that long-term planning is not his strong suit. He has a tendency to be very transactional and very situation-oriented, and it changes day by day. Then, hence his reactions driving the press and his opposition absolutely crazy. This is one of those times we're actually sitting down and saying, okay, point A, point B, point C might be really calming to the financial markets right now.
Well, it would be. And so we'll see how that meeting goes this morning or today, whenever it's going to be.
Did
Um,
they? Did the congressman actually know they had a meeting? Was it at least that far?
I don't know. I didn't see anything about that. I did see, though, that he's supposed to have a lot of the Wall Street CEOs are supposed to gather at the White House to kind of discuss the coronavirus and what maybe the White House can do to help.
Understood. Boy, optimism does change. Just to get a picture as to what a change it was from yesterday. Yesterday at this time, we were looking at virtually all of the big energy companies tanking downward by 25, 30% more. Today, as I look at my big winners list this morning, pre-market, Occidental Petroleum, one of the biggest losers yesterday, today trading up by almost 28%. Marathon Petroleum trading upward by over 20%. Apache, one of the other big oil patch companies, trading up by over 18%. And what's amazing to me, and the reason I flippantly call Wall Street a study in abnormal psychology, ain't nothing changed except the rumor mill. But boy, all of a sudden we're looking at companies like Occidental with like a 40% price swing inside of 2 days.
Yeah, that's right. It's perception, it's fear, it's the unknown and the uncertainty that really
Yep.
starts to drive those prices. I did before we went on there. I did a little looking to see kind of where are we from the 52-week high. So the last 12 months, basically, from the high to the low, where are we in a percentage? And so because I've heard that bear market get thrown around a little bit, and we are close across the
Now, I was
board,
going to say,
Dave.
we're within a couple of tenths of a percent of being officially bear market territory at the close last night.
Yeah, we were. Yeah, the Dow was basically from high to low was 19.8%. The S&P was 19.6%. Now the Nasdaq is actually there. It's down from its high to its low, 25.87%.
The last time we touched that 20% number, and I'm just thinking resistance levels more than anything else, last time we touched that number on one index, it was almost enough to turn trading around. It was like the market was saying, no, I'm not ready to go bear yet.
Yep.
And it turned everything around. I'm wondering if we've got some chart geeks out there thinking in that direction as well.
Well, and here's the deal. I look at that Nasdaq number, and that's not the current deal. That's the difference between the 52-week high and the 52-week low.
Mm-hmm.
And so we're not at the 52-week low right now, like everything else is. The Nasdaq isn't. The Nasdaq is, well, I guess it is. It's a tad lower than that, but not by much. So, but I was listening to one of the guys that I follow, an economist, and a chart guy, right? Real big chart guy. And and he thinks that we're going to see this bounce, and that there's a 60% chance that we've hit that low, at least in this trending process. Now, that doesn't mean that we're going to bounce off this and go, skyrocketing to a new high, but he feels like there's a 60% chance that we've hit that low for this sequence.
That's like that kind of confirms the notion of that resistance level at the 20% level for one index. Doesn't necessarily mean we're out of any risk of a bear market. That ain't going to happen. But it is interesting, though, with the bounce off of that. I didn't realize that NASDAQ had actually hit official bear numbers yet.
Yeah, it has off of that number. So it's going to be interesting as we continue to look forward. And today, I think, is going to be vitally important to see where we end up today. Any green at all is going to be helpful, but we continue to see that green diminish as we get ready to get closer to the opening.
Yeah, the one thing we definitely don't want to see is a red ending for today, because that might I would never say the bottom would fall out, but that would kind of take the bloom off all the rose that we got on the overnight. We got a couple of stocks that reported their quarterly earnings. I mean, not like it's going to change the entire direction of the marketplace, but there was some good news to be had. I noticed Dick's Sporting Goods absolutely kicked butt.
They did. Dick's Sporting Goods came out and they had a great quarter. They beat earnings per share by about 10 cents. Revenue beat. Where they really shined, though, was in same-store sales. So same-store sales growth was expected to be 3%. It came in at 5.3%. So Dick's really had a great quarter. They're up a little over 10% this morning before we get going.
I knew they were big. I didn't realize it was that big a beat on everything.
Yeah, it really was a good deal there. Now we got a couple that have missed. So we got Stitch Fix. They're the clothing subscription service. They had a mixed quarter, right? They kind of missed on earnings, beat on revenue, but they really and truly changed their guidance. For the rest of this year, and so that's kind of hurting them this morning. They're trading down, say significantly, Dave. They're 31% down this morning.
Youch.
Yeah,
That's
50
one
feet.
of those lines of work that I've been finding fascinating. Send you a box full of clothes, somebody else dresses you basically, and then send back what you don't like. The concept is cool, but I've got to believe that wives look at Stitch Fitch and say that gets rid of all the fun.
Well, yeah, it's the men that they're really, I think, catering to there, or
Well,
the
that's what I mean.
professional,
My wife can't dress me. It's no fun.
or the professional women who don't have time, right?
That too. Yeah.
So getting that. So the last one I have is Vail Resorts. Um, they they had a rough quarter too. They missed on earnings and revenue, and they basically pulled their full year guidance, um, and are not issuing any guidance. They're basically pulling it and saying we're not giving any guidance. Um, they're really having a tough quarter, and they're down about 6.5%.
Ouch. Those are old friends of mine from when I lived out in Colorado, so I'm sorry to hear that. Resetting the table for the morning yesterday, bloodbath, the only term you could call it. Dow was down by 7.79%, down over 2,000. Nasdaq was down by 625, and they were down by 7.25. Standard & Poor's was down 225.8. That was 7.6% down for the day. Yep, bloodbath, the only possible term. 45 minutes before we start trading this morning, Philip, we've been alluding to it. We got green ink. Has it held up green through the time we were talking?
It has, Dave. It has been bouncing between about 2.9% and about 2.5% up on the Dow. So right this second, the Dow is up 695 points, which is about 2.9%. The S&P 500 is right there with it. It's up about 82 points, 3%. And the NASDAQ is up 254, which is about 3%, a little over 3% also. So everything is looking green and heading back up, I might add. And so that's some good stuff there. We've got gold and silver heading down this morning. Gold down 0.8, silver down 0.4. And then crude oil is heading back up to it's at up 8%, a little over 8% this morning, $33.70 a barrel. I heard some commentators today saying that they expect oil to land somewhere around $42 a barrel when all this stuff clears out.
Once Saudi Arabia and Russia start speaking on civil terms again, right?
Exactly. And I read the headline that, the reason Russia's doing this is try to get the U.S. out of the shale oil business. And so obviously if it stays at this price, that would work.
Yeah, that's kind of their secondary motive. Once they get done with the war with Saudi Arabia, they want to be able to put our shale oil people out of business. At 42, we can survive. 33, that ain't pleasant.
Yeah.
World markets, evidently the Asian Rim was reading the press releases out of the White House. They were up by a little bit. Europe is following our suit in our futures today, and they're up markedly midway through their day. Interest rates, things recovered a little bit by yesterday evening, but now they're heading back down. And again, the 10-year Treasury bills are trading at 0.64% interest, which is still a flashing blue light special, right, Phillip?
Yeah, exactly. I mean, we've never seen interest rates hover around this rate in historic numbers.
Absolutely. So we're looking at upsy downsy, one way or the other. If you put money in at 4 o'clock yesterday afternoon, you're probably pretty happy this morning, but nobody's got timing like that. That's where professional advice comes in. How do I get it from you?
Hey, then give us a call at 863-382-0037. Catch us online on Facebook at Statler Financial Services. And then follow us on our Facebook page, on our website at statlerfinancial.com. And then every weekend for the Statler Financial Radio Show, 6 a.m. and noon on Saturdays, 10 a.m. Sunday mornings on News Talk, 7:30 a.m.
All righty. And back here tomorrow morning, hopefully with better news than we have this morning, right?
Absolutely. Hopefully we'll end up green today, Dave.
Be a nice thought, Philip. I'll catch you tomorrow. Have a good one.
All right.
It's
Thanks, buddy.
Thank you. It's 105.7 Light FM and Statler Financial Services, Phillip Statler.
Look, folks, I know this market has been crazy, ups and downs and all over the place. And if you're in that retirement danger zone, you need to give me a call. Let us walk through to make sure you don't have too much risk in your financial portfolio. 863-382-0037. That's 863-382-0037, folks. Hey, I look forward to speaking to you tomorrow. Have a great day.